Back to the channel. As always, if you are copy trading, you're an absolute moron and you deserve to lose all your money. Today's stock is called KRMN Holdings, ticker KRMN, trading at $88. And this is a long idea that has been on our radar for quite a while. Why are we entering now? Well, as mentioned in previous videos, the tensions in the Middle East create a floor potentially for this stock. The main catalyst in terms of the intrinsic conditions about the company is the financial integration of the recent Siemens Composites acquisition. We will get an update about that on the 10th of April. That's when the earnings report is going to be released. But we could confidently expect a reasonable move based on the current events that are taking place around the world, as well as the fundamentals of the company. What could break the thesis here would be a sudden broad market multiple compression, and that is something that I don't think is but necessarily happening in this sector at the moment. We see that at the moment happening a lot of with tech companies, the SaaS space, companies like Adobe, Salesforce, and so on. And those type of companies have been getting a lot of multiple compression. But as you can see here, even though there has been uh, the valuation has come down a little bit from extremely high levels, it does remain at exceptionally high multiples that the market is willing to pay for. So no, I don't think that is necessarily a high risk here, but one to take into consideration though. In terms of what the company does, they are a vertically integrated merchant supplier of space and defense subsystems. So that fits quite well in terms of the long book because they have a market cap of about 10 billion. It does fit well our volatility profile in order to get some longs in the book. And they operate with extreme momentum, but the market hasn't really digested yet the acquisition of Siemens Composites. So this expands them directly into the high priority maritime defense market. So that's submarines and strategic naval surface platforms. Wall Street analysts are mispricing, I believe, the immediate revenue accretion from this newly bolted maritime capacity. And in terms of what we can expect, well, we could see as a base case, right, the market pricing the accretive revenue from this acquisition ahead of the next quarterly report print. On the other side, we could get a more bull case where they actually blow out their next earnings report, forcing aggressive analyst price target upgrades above the current consensus. When we look at where they are in terms of that, you can see that the price target sits at about 110. The floor on the other side by the analyst community is extremely low, but the market's not really keeping up with that. So we could see significant moves going to the upside. At the moment, most of the analyst community are positive about it. There's a couple of hold and sell positions, but the rating has come down so much that if the results are better than expected, we could see strong re-ratings driving the stock to the upside. And of course, like I mentioned before, with everything they do, right, critical systems for defense, it's something that I think many institutional players are going to be rotating to back to safety. So this is a trade that will be going long into very soon. Hope you enjoyed the video. See you soon.